Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025. Good evening, welcome to the program. I'm Stephen Grootes. Obviously, huge sense of anticipation building. Perhaps more here than in most of Washington. It's a meeting that's very, very important to us, very important to our president, very important to our economy. It's the kind of meeting that can make or break a presidential reputation in some ways. Although, of course, Ramaphosa's reputation over the course of the years has been such a big reputation in so many different ways. At the same time, though, I don't know how important this is to the Trump administration. We know his views on us, and make no mistake, Elon Musk being interviewed by Bloomberg's Michelle Hussein today at an event in Qatar. She was in Qatar. He was on a video link, one of those looming screens that sort of looks out over the crowd. The emotion he displayed when she brought up the issue of Starlink, we can all see that some sort of deal is on the table from that earlier Bloomberg report. But the way in which he attacked our BEE laws, clearly he feels that it personally affects him. As he put it, that the only reason, in his view, that he cannot get a license to operate Starlink here is because he's not black, despite being born here. So there's a huge amount of emotion. If that goes in to the Oval Office tomorrow, I think this is going to be a very, very tough meeting. I would imagine the whole point is to try and get that sorted out before the actual meeting between the principals, if you like, between Ramaphosa and Trump starts. Don't forget, in a few moments, we'll speak to the CEO and president at Sasol, Simon Baloyi, and his bet on the future of Sasol. That share price up dramatically today.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, this time tomorrow, President Cyril Ramaphosa should be arriving at the White House for that meeting with President Donald Trump. Bloomberg reporting today, the president's preparing to offer Elon Musk a workaround for Starlink. Musk shouting at a Bloomberg presenter on the issue of BEE laws. Tshidi Madia, the associate politics editor at EWN, part of our team covering all of this. It's in Washington right now. Tshidi, good evening to you. Good morning to you, Washington time. Certainly the issue of Starlink, something that would not normally be discussed in the White House, and yet I have to wonder now if it may actually be quite an important part of tomorrow.
Good afternoon, good evening, Stephen. Absolutely. I think on a normal day, under normal circumstances, Starlink and that business deal and the concerns of Elon Musk should not be part of what two nations discuss. But we're not under normal circumstances. We are dealing with an administration that even the State Department is generally confused about what direction they'll take and what thinking is behind some of the decisions and developments within this very country. So it's not normal. Nothing is normal. It's not an ordinary meeting either. I think earlier you said that we are hyping it up in South Africa. Absolutely. We're definitely hyped up in anticipation of what tomorrow brings. But of course, the Elon Musk question could not be avoided, I think. He's always been a factor in the disinformation. So he'll be a factor, I suppose, this time around too.
We all know how difficult this meeting could be, and in some ways President Ramaphosa is, I suppose, almost the very personification of kind of everything that Trump has campaigned against. Trump is often very much about race. How is Team South Africa, how is the presidency feeling about tomorrow?
That's very true what you're pointing out about how everything that Trump has complained about, Ramaphosa seems to represent. But Ramaphosa is also this billionaire, and he's seen as a deals man and a negotiator, and Trump fancies himself as, a big business-savvy individual as well, a businessmen. So supposedly they'll meet each other at that level. They also have golf in common. That's been part of the conversation around the two of them, is that supposedly they'll find one another where they share some commonalities. I think Team South Africa's mood has swung quite extremely from yesterday to today. When I first arrived yesterday, I felt some anxiety in the air. I felt nervousness. The jitters were there. But today I just came from the South African embassy right now, where Ramaphosa is currently getting a briefing from his ministers, and he was calm. He was quite jovial. He sounded really excited ahead of tomorrow, almost confident that tomorrow is going to go well. We wonder about that. I'm going to be speaking to a couple of Americans to find out what they think. My colleague Clement Manyatel has spoken to a few people who feel South Africa has made a mistake agreeing to come, but they now that they're here, they need to kind of withstand the storm. But South Africans are excited, with officials even saying to me that, they've even invited them to a working lunch. That Zelensky didn't even get to that. So there's signs to them about how easy it's been to communicate with the Oval Office. That only started yesterday. It's been over the past few hours that they feel confident that this will translate to a good meeting. There are meetings that are happening, Stephen, I must point out, at the sidelines in the lead up to this. You asked about Elon Musk. Anticipation is that a meeting with Elon Musk might happen tonight as opposed to tomorrow. Again, as part of what needs to be done to try and smooth things over so that tomorrow goes as well as possible, at least from a South African perspective.
Tshidi Madia, Associate Politics Editor at EWN, part of our team there. Thank you. This time tomorrow as we go to air, we do expect that meeting to start. We'll bring you full and live coverage.
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
702. Stephen is on The Money Show.
6 to 8 p.m.
Expecting the President and CEO at Sasol, Simon Beloy, to be on your radio with you in just a moment or two. Was thinking a little bit more today about the problems that councils have and the knock-on impact, of course, of that on businesses. You heard the CEO at Astral Foods yesterday, the chicken producer, Gary Arnold, talking about how the problems at the Lekwa municipality around Standerton cost them 10 million rand a month. Now, I say this as the CEO at Rand Water has published a video of the most unbelievable amount of water being wasted from Rand Water. It's, in a way, not a terrible update that he's done. He's basically been filmed explaining what's happening. Next to this, it looks almost like a volcano of water. It's just so much water that is being wasted there. And that suggests then that there are going to be major problems with the situation with water supplies in Joburg in the next little while. So just thinking about the problems that we're going to have in Joburg as a result of that. Now imagine trying to run a business in Joburg. Just knocks on really from what Gary Arnold was saying yesterday.
The Money Show.
The market.
We just wait for Simon Beloy to be with us. Anthony Modasani, a senior equity sales trader at Absa CIB, joining us now. Anthony, thanks for coming in a little earlier than normal. Sasol, big capital markets day. Their share price down 50% on the year. Yeah. Everybody's been waiting for today in some way.
Yeah, thanks, Stephen. Always good to be here. It was always felt a little bit binary going into it, anticipation. What are they going to bring to the table? And it feels like it was a bit of back to basics, and I think the question for the market is, will it be enough? They've spoken about strengthening the foundation of their business with a focus on restoring the South African business. They're talking about the international chemicals business as well and driving growth there and perhaps even listing that at a later stage. I think they spoke about towards the end of the decade. And I think, the talk around earnings later on in full year 28, that seems to have got the market a little bit by surprise and a little bit confident, but it's always going to come down to delivery.
It's a long-term plan, but they're dealing with a long-term problem. You're talking about, this is an oversimplification, but a fossil fuels company in a renewable era.
Yeah. It is a very tricky environment. We've seen plans like this from Sasol before, so it really is, can they deliver? Can they actually bring it through? They're making the right noises, right, Stephen? They've changed their dividend policy. So, I think they're trying to appease investors as much as they can and do what they can within the realms with which they can play in at this point.
Yeah, it's also a lot of technical things that can go wrong. You want to run Secunda as hard as you can to produce as much fuel as you can from coal. That's fine. a lot goes wrong with lots of moving machines. Ask Eskom.
100%. They should know very, very well. And the market has sort of given them that treatment, right? I mean, if you look, it was down 40%, I think, 2 weeks ago or something like that. So you can see it's pretty harsh. They're looking for some investor support. I know a lot of the international investor base has divested from Sasol, so it's largely a local investor base that plays in it. Let's see what happens, Good luck to them, I think, is what we could say.
Platinum, I mean, astonishingly above $1,000 today for the first time. That having a big impact on platinum shares.
Yeah, so, I mean, we had the whole platinum sector stocks all up about 8 to 10%, depending on where you were looking. Very interesting, we've got World Platinum Week taking place this week, so there's a lot of buzz. Johnson Matthey spoke yesterday about platinum deficits of about 1 million ounces. We reckon there's a lot of that's demand-related, and so you don't know how reliable that is, right? The market changes so rapidly in that. But, I think today felt a little bit more technical in terms of the metal space, and that just supported the sector quite nicely for the stocks.
I mean, it's the kind of thing that, okay, nice today, but doesn't necessarily signal a long-term change. Platinum is going to be where platinum's going to be.
100%. Yeah, I was quite surprised by the move. It felt really aggressive, but you are seeing quite decent demand come through in the market. We've seen local appetite and local demand for the likes of Amplats, and we know they're Anglo-Americans unbundling them coming into June next quarter. So perhaps just a bit of excitement in the sector, just a little bit of short-term opportunity, but maybe.
It was interesting to see the gold price going up again today, just under $3,300. And I mean, as a sort of as a proxy for volatility, it's still very useful. And it happens as US markets again starting down for, I can't remember, I think the 7th day in a row. It does make you just wonder how US investors are feeling. Janie Dimon saying last night that US markets are actually too complacent about the impact of tariffs. I thought that was really interesting.
It was weird because, I mean, we were searching for a headline for something that Trump or something that had come out to sort of, understand the move, because it really did feel quite violent. And the dollar, in terms of, if you looked at how the dollar was trading, that was well behaved. Everything else was pretty, it was a subdued market environment. So it caught us by surprise. Like I say, it did feel more technical than anything else. And sometimes when things do hit technical levels, they do tend to exacerbate quite a bit. I think for now things feel a little bit in control on the global front, but like you said, things can change very quickly. So maybe we are a little bit too complacent.
We don't really know how things are going to go, but the point is, if you're someone at Sasol, for example, you're going to find predicting the future. So for them, they need to know what the fuel price is going to be. There was a time when you could make some predictions. It seems almost everything is off the table.
It's difficult, right? And if you look at the Saudi investment meeting last week when Trump and all his friends went down for meetings there, you're still trying to gauge whether these guys are, where they want to pin this oil price down, and what does that translate to, and how does that affect all the other chemicals prices and stuff. So it's very difficult to forecast in this kind of environment. I think that's why Sasol went the long-term play, because they're saying over time this is where they expect to land, and hopefully that works out.
Anthony Modasani, really appreciate the time. Thanks very much indeed. Is Senior Equity Sales Trader at Absa CIB.
702. Stephen is on X.
At Stephen Grootes.
Well, you heard a little bit about Sasol's renewal plan, if I can call it that, their transformation plan. Their share price dropping by over 50% over the last year, but today, Capital Markets Day at Sasol, unveiling a plan that will see it ramping up the production of fuel from coal, pushing its Secunda plant as hard as it will go, and at the same time, dramatically improving and increasing the amount of electricity it produces from renewable sources. The CEO and president at Sasol is Simon Beloy. Simon, good evening. I know a frantic day for you. You want to increase the amount of fuel you produce from coal. How difficult is that actually going to be?
Good evening, Stephen. Thank you for the invite, and good evening to your listeners. This is not going to be difficult. You remember we already have the infrastructure installed. So what we're doing, we're just maximizing production from our gasification process in terms of coal. However, we're reducing the coal that we're using for electricity, and that will supplement it to renewable energy. Our requirement for renewable energy is 1.2 gigawatts. As we unveil today, we will increase this and ramp it up to more than 2 gigawatts because we do have the captive demand to use that.
Okay, so you think there's enough of a market for the electricity you'll be producing?
Yes, there is enough, market for that electricity. You remember, together with our partnership in Discovery, we just launched an exciting product, Amply Energy, into the market, which allows us on a pay-as-you-go basis to share or sell the renewable energy with the small and medium enterprises, which will not be able to sign these long-term PPAs. So there is enough market for us to sell the excess electricity. And even in the event that the electricity becomes cheaper, which we know in the future that will happen where there is excess renewable energy, Sasol is well positioned to take that excess electricity, turn it into hydrogen, and then use it in our plants, as our facilities use more than 2.5 million tons of hydrogen. So we'll be able to take that green hydrogen and make sustainable products, both chemicals and fuels.
I'm not aware of anyone, I think, in the history of South Africa producing and selling electricity on a month-by-month basis in the way that you're looking at. And I put this to Discovery last week. It's very attractive for customers, but it could be quite difficult for you. It could actually be very difficult to administer.
Discovery has, the capabilities, in terms of the trading. As they explained, they will install, the smart meters that will allow them to seamlessly, with the use of, technology as well, seamlessly manage this process.
I'm not worried about the technology. I'm worried about the money. In other words, what can happen is you could have a bad month, a problem or something, and in the space of a month, everybody pulls their business from you. That's what I'm saying.
Yeah, no, but that's all right. What that means is that then Sasol provides the backstop, because we do have the captive demand. Then we will use that electricity. We'll either use it as pure electricity, or we'll take it and turn it into hydrogen and then make products through it.
Okay, I think I get you now. Thank you.
So that's where the partnership comes in.
Okay, that makes sense to me now. Thank you. Just the issue around turning coal into fuel, and oil prices are relatively low at the moment. To break even, you need oil to be at around $58 a barrel at this level. You want to drive that down to $50 a barrel. You'll make more profit that way. I would imagine, you say it's relatively easy to do, to ramp up your production, but to ramp it up and to do it in a cheaper way, and there's not really much certainty around oil prices. They're above those levels at the moment. Sure, things are very uncertain. But that sounds like quite a lot of things that need to go right for you.
Stephen, when we unleash our strategy today, it's a strategy that, I did talk about during the half-year results. So we just reconfirmed it, and we spoke about the reset and some reset elements of that strategy. We did indicate that in the Southern African business, we need to work on coal quality, operational reliability, and cost optimization. So on the coal quality, we do have a plant to improve that coal quality. We're busy building that plant. It's a destoning plant. Once we have that quality, working on the operational reliability will then allow us to increase the throughput of the Secunda production. Remember, we're not talking about new production here. We're talking returning back to the previously proven production in Secunda.
Sure. Okay. So, yes, your share price went up today. I think the perception has been that Sasol is going to find it very difficult to turn itself around. You've obviously gone some way in changing that. But I keep coming back to this. So much needs to happen, and you are trying to turn around a big ship that's actually been going in just one direction for a very long time. Yeah, today what we did, I think as Team Sasol, we recommitted ourselves on this transformative journey. We did talk about 3 cultural elements that we will unleash in the organization to help us on this journey. And the first one was prioritizing value over volume. So we have to make sure from the volumes that we produce, we place them in the correct channels. We have to prioritize a culture of cost consciousness, because we do spend a lot of money. We have to make sure that both internal and external cost is optimized. And finally, we have to deliver on our promises. And one of the key promises is to get the feedstock quality right. Through that feedstock quality, we deal with the operational reliability. And we did indicate that by FY28, we will return Secunda to the previously high volumes that we've seen there before. Simon Beloit, thanks very much indeed. Really appreciate the time. The President and CEO at Sasol, bringing the time on the Money Show to 6:30.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Good to hear from you this evening. 011 883 0702 021 446 0567. Ali on the line from Ekurhuleni. Ali, good evening. Welcome to the Money Show.
Stephen, a quick one. This is Ali Gule from Tsakane. Stephen, under the normal circumstances, in a normal democracy, this Minister of Finance should have been gone long ago. I don't know why we're still keeping him. If he can't perform his duties, then why are we having him? Why are we paying him? In fact, there's a lot that has been said that Treasury needs to raise certain amount of money. If the government was not wasting so much money on corruption in all three spheres of government, the money that we're losing is far more than the money we need to raise. This is not coming from the public or from the media. It's coming from the Auditor General. Year in, year out, yet there's no prosecution. Why are we still keeping Kotongwane as a minister?
So I mean, sure, and I mean the same could be said of Pravin Gordhan before him, for example, and others. But isn't it really a political issue? Isn't it a government problem? Maybe even just a how we govern problem?
It is a political issue. However, who is funding their own goals is taxpayers. And who's bearing the brunt is ordinary people on the ground. Unemployment figures tell a different story. People are poor, and yet the driver of the bus is still behind the wheel. And as the bus crashes, we are the casualties, the passengers. We're voting for them, we're employing them so that they can perform a certain duties. If they're failing, why are we keeping them? Why are we keeping him specifically? He has demonstrated more than once he's not capable.
Ali from Ekurhuleni, strong view there. Ali Gule. 17 minutes to 7 the time. Well, the budget due, again, to be presented at 2 o'clock tomorrow afternoon by the Finance Minister, Enoch Godongwana. In fact, the President will have to watch it from Washington. And Paul Molopiani is the Chief Economist at Alexander Forbes. And Paul, good evening. If you look back to February, the first budget, you look at the situation now, so much has changed. I would imagine the financial situation looks a lot different, and part of that is because of the Trump administration.
Yeah, good evening, Stephen. You're quite correct. I mean, I think everybody has been talking about the revenue hole created by the VAT reversal, but when you look at the macroeconomic outlook, it has deteriorated quite significantly from the 1.9% growth projection that the National Treasury had for this year. I mean, recent figures by the IMF, they estimate growth for South Africa at around 1% this year. So quite a significant deterioration. And as you correctly point out, it is due to, a much bleaker global growth outlook given the increase in trade restrictions and trade policy uncertainty. But the other thing as well has been domestic factors. So growth last year was a lot weaker than most of us anticipated. So we did start off on a relatively weak base. So it is a combination of both global as well as local
normally you would think, okay, that was in February. This is now, in sort of, 2/3 of the way through May. Well, let's make a lot of changes. And yet changing a budget is not an easy thing to do.
It's not going to be an easy thing to do, hey? And if we just put give some numbers, if we look at the revenue side, right? So as we correctly pointed out that the VAT reversal creates a 75 billion revenue hole, but that's actually around 69 billion because the zero rated expansion has also been reversed, right? So there's a 69 billion revenue hole created by the VAT reversal. But in addition to that, if you take the deterioration in the growth outlook, you're also looking at an additional 69 billion in total over the 3-year forecast period that, the Minister of Finance now has to offset by expenditure cuts. And I think that's where it's going to be very difficult for him if you try and look at what's then going to be cut on the expenditure side.
So, I mean, we all know government doesn't get value for money, and importantly in the first budget was the promise of reform. And if you are going to reform, and if you've made a promise to, and I'm presuming it might also be part of the price of support from the DA and other parties in the National Coalition, you would start that reform as soon as possible. I'm afraid to say, Mpho, just speaking for myself, I'll be surprised if that does start tomorrow.
Yeah, so I doubt that will start tomorrow. I mean, we've had several presentations around the next phase of Operation Vulindlela. And I think for me, this is where I think the issue around the expenditure cuts is going to be quite difficult. So like, for instance, if we look at, so going back to the February budget as well as the March budget, what was behind the tax increases? It was because they wanted to increase expenditure, right? And what they were trying to increase was higher allocation for infrastructure spending, because they wanted to create that virtuous cycle that they're talking about in Operation Vulindlela. Then there was an allowance for the 3-year government wage deal, the extension of the social grant, above inflation increases in social grants, as well as allocation for frontline services, because of the deterioration in service delivery, right? And if you just look at those 5 items, firstly, the allowance for the 3-year wage deal, as well as the extension of the social grant and the above inflation increases in social grants, that can't be walked back because it's already been effected. So that essentially just leaves the minister with looking at cuts to the infrastructure budget, as well as the allocation for frontline services. But that then goes against what they're trying to do in Operation Vulindlela. So very difficult, certainly for the minister. And at this point, they are going to be hoping for an improvement in the growth outlook and a pickup in the reform momentum.
Mpho Molopiani, thank you. Chief Economist at Alexander Forbes. Charles de Wet is an executive at ENS in the tax practice there. Charles, good evening. 69 billion rand hole. This is all, and the whole fight about Budget 1 and Budget 2 were about the fact that government wasn't getting enough money through tax. We know there'll be no VAT increase, and as I speak to you tonight, I still have no idea how this hole is going to be filled.
Good evening, Stephen, and I agree with you completely. I think we've had more tax increases this year than the country can deal with, so there can't be any more tax increases tomorrow. I mean, we've been through a few versions of that. There was the fiscal drag adjustment that wasn't made, that did collect a lot of money. You know, the excise announcements have already been made, so those increases are being announced. I can't imagine that he can tinker with those again. The transfer duty, the new rates are already in place. So, you know, it keeps on coming down to expenditure, but there's no clear answer how he's going to fill the hole that, as you've just said, is probably bigger than it was in February and March.
I mean, I worry that tax is going to get more political than it's ever been in South Africa. We're going to see politicians from different parties arguing about it all the time, and that might actually make tax policy in the future almost impossible.
I think, there is definitely a risk that that's going to happen. I mean, we've seen, lots of comments about introducing wealth taxes. I mean, we've seen the Minister and Treasury push back against that, by saying that there are already wealth taxes in the country, and potentially if you introduce more wealth taxes, it could in fact have an impact on the broader tax base, because you'll just encourage people either to stop working or to immigrate in the circumstances. So that's not a good answer. I think it's been good that there's a lot more awareness around budget. But as you say, tax policy and one of the things that was always good from a budget perspective and from a tax policy perspective is there was a fair amount of certainty. We knew what direction we were heading in, and that didn't shock the economy too much in the circumstances, whereas that is now changed substantially because everybody has a view in terms of how to collect that initial that additional amount and what is required in the circumstances. And at the same time, we see a higher allocation to SARS, more pressure on SARS to collect additional money, and that puts pressure on the economy as well, puts pressure on taxpayers as SARS goes about its mandate of collecting the highest amount of tax possible.
Charles Levet, thanks so much. Executive at ENS and the Tax Practice. Voice notes coming through this evening on 072 702 1702.
Hey guys, hey Steve. Just a comment on Ali's call-in. If the driver of the bus is really bad, then get a different driver of the bus, aka vote for someone else.
Interesting. Coalition politics, budget style, no? Budget politics, coalition style.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, so many people in many sectors of our economy will be watching the budget. And then tomorrow night, as we're on air, we presume that big meeting between the President Cyril Ramaphosa and the US President Donald Trump. One of those sectors are people who export goods to the US, already been affected by the disruption, the volatility, the uncertainty, some tariffs, of course, we shouldn't forget, that were imposed. And we don't know what will happen tomorrow. Terry Gale is the chair of Exporters Western Cape. Terry, good evening. You sell goods, you help to facilitate the sale of goods from South Africa to other markets, including the US. How important is tomorrow's meeting for you?
Thank you, Stephen. I do appreciate this opportunity. It's very, very important because Western Cape, from our point of view, the USA is one of our biggest trading partners, particularly for our agricultural goods. We also send a lot of manufactured goods into the US, and it's been an incredible growth for us, for our exporters, and it can have a huge, huge impact in particular from job creation to the actual lack of jobs, the opportunities that we do have if these are imposed, the tariffs that President Trump has been talking about, the 30%. We already have the 10% in effect, but that is a global thing for all their trading partners. So, and I know a lot of our exporters actually have spoken to their clients in the States. At this moment in time, they are not happy, but they accept it because they do understand that South Africa have had a long relationship with our exporters, with our clients here as manufacturers. So it's something that they're willing to actually accept. However, if there's a 30% that is going to start being implemented, which will take place from the 9th of July, a lot of businesses, unfortunately, are going to be heavily, heavily impacted in the Western Cape. In particular, we talk about our wine industry, which has a lot of massive exports, huge potential, huge market gains that have been happening in the States. They worked hard to get their product there, and they're now at a level where things are really starting to happen, and this will have a major, major impact, unfortunately.
I mean, there's nowhere else for the goods to go, well, not quickly, right? Yes, we need to work more with China, more with the EU, all of those things, but it's not going to happen by kind of July the 10th.
No. Unfortunately, it's not. It's not an overnight thing that you can just suddenly change your destinations for your goods. A lot of the goods are particularly manufactured for the American market as well, and I do know some of, as I said, on the manufactured side in particular, that the exports of these goods are particularly, and they are very pedantic at exactly what the quality that they require, the Americans, and we've been able to meet that and to meet the standards that they want. And I think one of the big things, as I've said previously, is that we have this incredible link between South Africa and Cape Town in particular. We've had a regular guaranteed weekly sailing with a transit time of 18-20 days, and it's been like this. It's worked like clockwork, so they know that if they miss a ship this week, next week there's going to be vessels moving across as well. So it's been a fantastic opportunity, and as I say, in particular, we are concerned because it's been so creating of jobs, which of course was what our economy wants.
So much about this is disruption. We've spoken to trade experts who've said to us, in fact, in some ways, the final tariff doesn't matter nearly as much as the sheer disruption, the uncertainty. I know there are other factors on that particular route from Cape Town to the US that essentially talk about a deal involving two shipping companies that may be in jeopardy, and that's a complicating factor to all of this. But just the uncertainty, are you already seeing declining volumes being exported as a result?
You know, it's quite interesting when you ask that question, because in one side, yes, but on the other side of it, there's certain people are saying it's almost business as usual and trying to get as much across as we can before the 9th of July, so we can get stuff moving with that, just from exporters in particular, but looking at new goods, looking at new markets there as well. So the Americans are still there, and the inquiries are, if they haven't stopped at all, the inquiries are still coming through. And I think that even though there is this uncertainty, they're trying to get as much as they can, because they realize from that point of view, South Africa has a very stable manufacturing market, and we are reliable when it comes to that as well. And as I say, the bottom line is it's been easy to trade with us. And of course, AGOA in particular has seen the growth. I mean, the African Growth and Opportunities Act is exactly what it is. It's seen phenomenal growth. And I think one of the countries which is our border, South Africa, that's heavily impacted, of course, is landlocked Lesotho, which has got huge impact. I mean, Lesotho's manufactured clothing, and it's like 60% of the economy is based on exports into America. You know, so it's the impact is you can't even estimate it at this moment in time.
Terry Gale, really appreciate the time. Thank you. Chair of Exporters Western Cape, just one of the sectors that's going to be so badly affected by tomorrow's meeting. I have to say, and I've been following politics for just a little while now, a couple of years, and I can't recall any sense of anticipation for a singular meeting involving our president like this in the past. I've been sort of thinking about it a little bit. I can't recall. I mean, yes, we've had meetings in the White House. We've had this, we've had that. I remember when George W. Bush, the president, came here. There was that incident with the elephant. But he came here, and there was, I think, each journalist, each side was, the Americans and the South Africans were allowed sort of one question each. And I remember that, but that was here. But this does seem to be on a different level. And one of the funny things about it is that because things are not just so transactional, but so, I almost want to say irrational in the White House, but let me think of a better word, maybe just so changeable, that the outcome of the meeting, it may seem like an absolute disaster and actually has no impact whatsoever. The meeting may be wonderful, perfect. We may all be praising them to the skies this time tomorrow, and nothing may actually result about it. And doesn't that tell you something about the Trump administration at the moment? You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the second hour of the program. Plenty going on that's not related to Trump, to the White House, and to the budget tomorrow. And of course, we'll cover both of those. We are expecting, in fact, to speak to the Finance Minister, Enoch Godongwana, tomorrow evening, just after 6 o'clock as we start the show. And really, the only thing that could actually interfere with that is if the meeting between Trump and Ramaphosa, between our president and their president, starts at that time and the media have access. And just a reminder, of course, that our reporters, Clement Maniatela, the host of 9 to 12, and Tshidi Madia, who you've already heard on the show tonight, both of them are expecting to be in the Oval Office tomorrow to bring you that live coverage. It's probably around now, in fact, they'll come out of the sort of private part of the meeting and we'll have that moment. And I have really no idea what is going to happen tomorrow. It does seem that our team is going briefed, ready to go, by which I mean the government, and that they do have deals on the table. How exactly it's all going to work, I've absolutely no idea. Talking of that, though, and I was going to say it's a Trump-free hour, but it's just not possible at the moment. A Personal Finance this evening will be talking about how you invest during this time, how you sort of keep calm and carry on. And in all of the conversations we've had about personal finance since in the few months that I've been with you on The Money Show, it's been interesting how so often it just comes back to two things, doesn't it? Diversify and then take your time. Don't rush. Don't make a snap decision. Don't spend too much time. Don't react to everything. It really is about sort of fundamental value. I find that very interesting, in fact. We'll talk more about that on The Money Show this evening. Good to hear from you as well on 011 883 0702 and 021 446 0567.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
On the next Money Show, all eyes on the Finance Minister, Edom Godongwana. He'll join us after the tabling of the national budget. Where will he find the money, and how will Budget 3.0 affect your wallet? Then, across the Atlantic Ocean, a special broadcast of President Cyril Ramaphosa's guest appearance on Meet the US President, live from the Oval Office. He's the first African president to sit down against arguably the most difficult leader of the free world. Also, if we have time, analysis of all the top stories of the day.
702. Stephen is on X.
At Stephen Grootes.
Well, confirmation this afternoon. The board of Daybreak Foods has been reconstituted. The company is owned by the PIC, but it's been failing to make payments. It's currently in business rescue. Last week, workers were not paid. Hundreds of thousands of chickens had to be culled because they had not been fed. It is, on every measure of the word disaster, a disaster. Sukanati Manchancha is an editor-at-large, a writer-at-large at News 24. You know, of course, of the reporting he's done in our society over the years. Sukanati, good evening, and really do appreciate your time on The Money Show. So, a new board gets to take over, includes some people who know the company quite well. Is this the right move?
Stephen, it's absolutely an academic exercise because the company has now been placed in business rescue. The business rescue practitioner who will be appointed by the board will do the day-to-day running of the company and try salvage some value from it. So this is, again, one more delaying effort, or rather kicking the can down the road by the Public Investment Corporation, which they should have done this many months ago and placed the company in business rescue in order to safeguard the employees, the assets, and indeed all the stakeholders.
Do you think even now they're trying to just delay that process? We know how people feel about a state-owned entity going into business rescue.
It's absolutely, it should not have gotten to this stage, Stephen, but it was people managing a company that employs more than 3,000 people, as if it's a government department. Daybreak Foods is playing in the market, and it deals with the real assets and the livelihoods of those chickens that have been now destroyed by the PIC's run around and shenanigans, and the management, the poor governance of the board, various board of Daybreak. Since the company was taken over in 2015, it's been totally run to the ground and destroyed by the actions of the Public Investment Corporation, which of course holds 100% of the shares on behalf of three organizations: the Compensation Fund, the Unemployment Insurance Fund, and the Government Employees Pension Fund. They have wasted billions of rand destroying big farms that employed large communities to the east of Gauteng, just outside Gauteng in Delmas, which is on the other side of Davidton or Benoni. And this company has really been run to the ground by poor management and the politics of the PIC. Rather than, it's not that it couldn't compete, but the poor people that were put on as management there, it started all the way back, Stephen, around 2018. But things came to a head in 2021 when Boas Seruwe, at the time the chief executive of Daybreak Foods, together with Matapelo More, who was an internal auditor of Daybreak Foods, together with about 10 or 12 other senior executives of the company, they wrote to the Public Investment Corporation and said, "Excuse me, the board you have just appointed is running the company to the ground, is contravening all known good governance practices. The chairman is just carrying on as if this is a personal spaza shop. Please, will you intervene?" The result was that those employees who complained wrote to the PIC back in 2021, were all chucked out. and some of them were even charged falsely, and there were to be no prosecution. Since then, it's been downhill to the point where they have not been able to feed the chickens, forcing the 400,000 chickens to be culled during the last 2 to 3 weeks.
I was astonished. I mean, Sekunati, you and I have been, like the president, astonished at many things. But, I mean, the Sunday Times report this weekend that the now former chair, Bojane Sehwa, took a payment of 600,000 rand last week in the middle of this crisis where workers were outside protesting because there was no other way for them to get people's attention because they hadn't been paid. She took the money and then resigned.
Going totally unpaid. That's what has been happening with the Daybreak Foods. Since it was acquired back in 2015, it's all about those people that were put on the board. Let's repeat this again, by the Public Investment Corporation, which controls 100% of the shares. That man there, who and again, the Sunday Times has been doing great reporting on this. Sabelo Skiti has been following this since at least 2018, and the employees are still protesting there. They only received half their pays for April. They only received it after the PIC injected 74 million rand last week. They will go unpaid again this month. But the people on the board just do as they please, not only just messing up the governance, but grabbing for themselves what they want. And the result is 3,400 families of those employees are going hungry. But the chickens have been really murdered, and it's a disaster of proportions, and it's all again we have to place the blame firmly at the door of the Public Investment Corporation and those who manage the PIC. Not only the current management of the PIC, but everyone who has been in charge and making these decisions about Daybreak Foods since 2019.
Is there any hope for the company? Business rescue practitioner, all the rest. We know how long this can take. Business rescue practitioners can do very important work, Sekunati, but as the post office has told us, they don't come cheap. I mean, is it worth saving? And I mean, there are facilities and there are workers.
It is totally worth saving. What can be most sustainable is removing the company from under the control of the Public Investment Corporation, because as we did see, of course, the most infamous example being VBS Mutual Bank. What happens at the PIC is not entirely commercial. This company is now in this kind of trouble because the PIC reneged on its own deal last year that it would advance 250 million rands in funding to the company. Inexplicably, they just turned around and said, no, we are not doing it. So there's a lot of ulterior motive going on, a lot of selfish activity going on, absolutely no care whatsoever for the company, for the stakeholders, for the employees, and indeed for the environment. There is hope if this board appointed the correct business rescue practitioner who will look only after the interests of the company and its employees and stakeholders. So you have to get rid of some of the assets. The chickens have all been killed by lack of feed, so there's really not much there. They will have to sell off some assets in order to pay about 600 million rands or just even north of 1 billion rands to the suppliers that have been going unpaid for about 6 months. There is hope. If, again, there is no political interference in the running of the business rescue process. You see in the post office that you've just mentioned now, Stephen, it's been in business rescue for about 6 years. That's totally abnormal. You know how it went with South African Airways, because there is a hidden hand there that's doing everything other than looking after the best interests of the company.
Sure. Sekunati Mantshantsha, thanks very much indeed. Writer at large at News 24.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, let's find out what's happening on our continent business-wise. Dr. Otendo Hunduengwi is the founding director at Tribe Africa Advisory and also author of the book Rumble in the Jungle Reloaded. Otendo, good evening. Welcome back to The Money Show. A lot going on in Senegal. The president championing digital sovereignty.
Hi, Stephen, and to your listeners, and absolutely great to hear your voice, Stephen. Yeah, so Senegal, if you recall, President Faye has taken over, one of the youngest presidents on the African continent. And one of the key initiatives he's wanting to drive is digitalization with regards to reforming the economy and also accelerating the growth of the economy. So he's committed to a $1.7 billion investment focused with regards to the digital economy. He's recently been to the US in October last year. He visited Silicon Valley. So you see he's quite committed there. And Silicon Valley, as we know, just in terms of tech startup funding of the US, $187 billion compared to $3 billion in Africa collectively. So a huge opportunity there. One of the challenges obviously Senegal has been having is that they discovered an understated debt from the previous regime, which they highlighted to the IMF. So they still have to come out of that. But ultimately, he wants to replicate what Estonia has done, whereby they've invested significantly in digitalization. 99% of Estonian economy is under digitalization, and that has contributed 2% GDP. So he's quite focused, quite a big vision, a big step, but at least he's moving in the right direction in terms of that.
Looking at some of the top companies this year in Southern Africa, and Malawi seems to be doing quite nicely.
Yeah, so this survey was done recently and excluding South Africa, so not to distort the results. Outside South Africa, in Southern Africa, the top 10 companies that have been performing well, according to this survey, 7 are from Malawi, 9 out of 10 are from banks, except for Truist in Zimbabwe, which is actually quite interesting because they went through a bit of a doldrum. And the other one is Airtel in Malawi. But 7 are from Malawi, 4 from Namibia, 4 from Zimbabwe, and 3 from Mauritius. Some of the key highlights, Stephen, FNB Capital Malawi had a market capitalization of about $2 million. So it grew about 3 times from the previous time. And another was NMBM, another bank in Malawi, which had about $1.7 million capitalization, market capitalization. And I think some of this growth is primarily because of trade agreements that they've secured, but as well as lending that's happening in the key areas. And Namibia was one that also stuck out. B2B Gold, we had 3.5 million capitalization to 3.8 billion. $3.8 million capitalization. But again, outside the scope of South Africa, it was just interesting to see these trends of Malawi, Zimbabwe, Namibia performing quite well. And you'd have thought the oil countries, I guess, are taking a bit of a knock in terms of the bigger geoeconomics that are helping around the world.
It's also about momentum, isn't it? You know, good companies doing well lead to more good companies doing well. You create an ecosystem in some ways.
100%. An ecosystem absolutely crucial, and I think that's what sustains and drives these companies, especially, and also diversification, not just relying a lot on one sector of the economy. And like, for example, Angola, which relies a lot of oil, that obviously becomes a challenge. Mozambique also had a bit of a knock coming out of the destabilization, what happened with the politics in terms of the elections. But it also talks to diversification. And even though these economies are small, they're diversified quite well. And that also contributes in terms of the financial services sector doing well.
In Algeria, a new domestic airline set to take off. Aviation industry having a rough time over the last 5 years, of course.
Yeah, so Air Alger, or Algerian Airways, is wanting to invest into another 16 planes. They've currently 15 planes, but they've seen their demand, especially in the southern part of Algeria, growing. So they're wanting to buy about another 16 planes and borrow or lease 8 planes. The main supplier being Boeing and Airbus, bearing in mind that Boeing's head office is now in Ethiopia for Africa. The fund, it's a local fund that is actually making the investment, which is also good. So it's called the National Investment Fund, FNI, and they are contributing 80% of the financing in terms of contributing to this. They see, as Al Alger, they see about 50% traffic growth in their region in terms of domestic flights. So Algeria, obviously, another big oil economy, but they're seeing economic growth and opportunity, and they're making the right investments with regards to their airlines. So that's quite an interesting initiative happening there, Steve.
And then Temu and Shane, I mean, in the news here for a long time, in the news in the US too at the moment, they're under a little bit of pressure there. And Jameer, an African competitor, what are they saying about it?
So Jumia, I mean, the equivalent of Takealot, a big e-commerce player, has been operating in the African market a long time. Direct competitor to Temu and Shein. The irony of it is a lot of the products that Jumia supplies its customers in Africa are from China. But since 2019, when they launched, they're listed on the New York Stock Exchange, they've never made a profit. And the CEO came out recently and highlighting that they are down. I think they made turnovers of 161 million, but they're down by 7%. They're still making losses. EBITDA is only on 54 million. They expect to be profitable in 2027. They highlighted Temu and Shein as their biggest competitor. The big markets like Nigeria and Egypt have been impacted dramatically because of currency devaluation. And I think they lost on average 40%. But a lot of opportunity they see on the market, but they're still struggling to come out of the doldrums. They've done a lot of internal perspective in terms of looking at themselves, in terms of creating operating efficiency, also reducing costs with regards to outsourced licenses and subscriptions for softwares that they're using. But the question is, by 2027, will they come out of this profitability or lack of profitability, and how patient are the shareholders? But the thing about Africa, Stephen, we always say it's a long game. And the question is, will Jumia last? But at the moment, the CEO is optimistic around that.
And then agriculture in East Africa, lots of apps, lots of tech helping out there. Is it making a difference?
Yeah. So EAF, which is the East African Food Association, is invested significantly in terms of technology. It's it's a local Tanzanian operation based in Dar es Salaam. And just to give you some stats, Stephen, and they're focusing on the SMEs and startup in the farming space. They're looking they look after about 10,000 farmers, 7,000 small retailers, and 45,000 banana crates that they deal with and handle within a week. They're invested in applications that allow distribution and scaling for these farmers. So it's a great story to have. One of the apps is called Soko Chep and supports wholesalers and retailers, and also gives and educates farmers in terms of climate change and diversity, as well as in terms of best practice. So a huge impact in the East African community, and obviously allowing farmers to be able to scale and go to the next level, making the right impact in the region, Steve.
Dr. Rotendo Ndungi, thanks very much indeed. Founding director at Tribe Africa Advisory and author of the book Rumble in the Jungle Reloaded. I sometimes wonder when we, look at what's happening in Africa and we spend so much time talking about the rest of the world. And look, what's happening in the rest of the world does move international markets, volumes of capital, etc., etc., etc. But if things are going well at home, the rest of the world doesn't matter so much. Let me just put it like that. And yes, if you are a boat in a stormy sea, what's the most important thing? That your own engine runs and you can try and chart your own course. And that sometimes is one of the things that maybe gets missed. Just something to sort of think about ahead of tomorrow's meeting and the head of the budget, all happening at the same time. If all of our stuff was working in the same way, if we were all, frankly, pulling in the same direction, well, I don't think it would matter quite so much as to what's happening internationally. Unfortunately, for various reasons, what is happening in the White House does indeed matter, but it should be that what's happening in Africa matters more. Personal Finance is next at 7:30.
The Money Show. Personal Finance.
Well, I did say we would try and keep it as Trump-free as possible, but there's no avoiding the impact, the huge effect that Trump's tariffs, Trump's policies have had on world markets and what that means for the value of your money. And I'm not just talking about the money in your pocket. I'm talking really about the money in your retirement fund. Lesego Morareng for Warren Ingram on Personal Finance. Lesego is a wealth manager and director at KLU Wealth. Lesego, good evening. Nice to meet you. Thanks so much for coming into the Money Show tonight.
Good evening, Stephen. Thank you for having me.
So obviously, when we look at what's happened over the last 6 months in markets, or just since Trump took over, and particularly in the last couple of months, we had the sort of Trump, we had the tariffs, then they were changed. I don't think anyone has really seen markets do what they've done, up and down, so dramatically. Where do we even start in this kind of moment? It's very scary.
Sure. I'll tell you, Stephen, I've been in the industry for 18 years and it's been very adventurous. I think, and that is exactly what it's natural to have. There's been a lot of panic. There's a lot been of worry, uncertainty, and I think that's what concerns us as financial planners. How do we actually keep sane? How do we keep abreast? How do we keep our emotions intact? Because it's volatile as it is, and to have the added emotional anxiety is just quite catastrophic. So we actually are helping our clients to remove the anxiety, to be calm and manage the most important and have the correct conversations with our clients.
I love the rationality. It's not how I felt when I look at the Dow, plunging, and the JSE, thankfully, because it's so balanced and resources balancing things out a little bit. But try and keep rational when you're actually watching your retirement. I mean, there's a great Bloomberg presenter who said, I looked at my 801, which is their retirement fund, as I came on air, and I'm so much poorer than I was.
Stephen, I mean, the markets, I think in that week, it was down minus 19%, the US markets alone in a matter of days. I mean, the last returns we saw was when the Ukraine-Russia came out, and before that was obviously COVID. So it was incredible. So if you were looking at your statements, and most clients were looking at their statements, it was panic. But again, it is, to be honest, something that we did anticipate. So I think even leading to the elections, we didn't anticipate the extent and quite the way it unfolded, the way Trump unfolded. But I think for the longest time, we've been saying to clients, markets are quite high and we are anticipating some sort of correction. So again, I think the point that in these times, you need to be speaking to someone who's an expert and allow them to guide you through the motions. It is largely, to lose 20% of your portfolio overnight is incredible, and you'd need to be a super person not to be affected. But it really is. This is a time to get assistance, to speak to someone who is going to guide you correctly. Failure to do so is going to be quite stressful
and expensive. Okay, let's talk about managing cash flows. I'm sort of reminded, his name's escaped me now, but the CEO at BlackRock, who was like, there's so much money sitting in cash at the moment because no one wants to invest it. But let's just talk a little bit about managing cash flow, because I think for a lot of people it's quite tempting to sell everything and keep it in cash and therefore keep yourself quite liquid.
Absolutely. And it makes sense, right? If you think about it, you don't know where the markets are going. You don't know, you don't want to lose any more money. So definitely it is on paper rational to keep money in cash. However, it's the worst thing to do. It's one of the worst things to do. So we actually encourage our clients to, instead of, and what we've all agreed is that we don't know what's going to happen. I mean, there's a 90-day rule. We know that there's going to be geopolitics. There's lots of discussions happening. So I think it's important that clients must understand that you cannot control the markets. Nobody knows. And if anybody promises to know what is going to happen, they probably are not going to get it right all the time. So I think it's important to move the discussions away from the economics and to move away from geopolitics to markets and company returns and X and Y. But to rather focus, if you want the best outcomes in terms of managing money and getting the long-term benefits, is to actually sit down and focus on what's important. So one of the things that you mentioned is having too much cash. So why that's a problem? Yes, you probably sleep well at night, but the problem in the long term, firstly, you give a lot of that return of that upside to the tax man. So any returns on cash actually give you higher tax returns, tax expenses. So we don't encourage clients to be over-invested in cash. And then secondly, you also lose out on a lot of great opportunities that may exist. So like we said, the US markets, just in that week of the releasing of the Trump tariffs, they were down minus 19%. They had recovered within a month after that. So if you didn't invest in that, you would have lost out on great upside potential. And there's a recent research from Alex Forbes that actually says that over the last 25 years, if you had lost out on the 10 best days in the market, you actually would have had a negative return over the last 25 years. So it is significant.
Just 10 days.
Just 10 days, over 25%. So someone that had invested and stayed invested over that period would have got plus 13% per annum. So it is absolutely important to not be emotionally motivated when making decisions. So cash is definitely something that we don't say you shouldn't have, but you need to have appropriate cash. And obviously the opposite of that is when you don't have enough cash. That's also a problem. So it is very important that you manage your cash flows. So we help clients understand how much money you need, when do you need it, and how much exposure do you need to have. So there's a lot of value in actually managing your cash flows appropriately.
And I suppose the problem is that if you're really going to take cash out, you're going to take it as the market is turning. You're going to take it as it's crashing. You're not going to take it just before, unless you're, Warren Buffett. You're only going to take it at the worst time. So you're actually harming yourself quite significantly.
Absolutely. And Stephen, that's so profound because we've seen that a lot. So two ways. So what happens is that clients, so the obvious one is the two-part retirement withdrawal. So clients are withdrawing at the worst time. And how that unpacks practically is that if you're withdrawing, so let's say the markets are down minus 19%, and then you, over and above that, withdraw 10% of your portfolio, whether it's two-part or whether it's just a normal withdrawing, your portfolio is down minus basically 29% overnight. And unfortunately, even if it does recover, you've lost out, you've basically withdrawn at the worst time. So we've seen two-part withdrawals, clients are withdrawing from that. And unfortunately, not only is that not such a great idea, so you're withdrawing the money, but you're giving a chunk of that to the tax man, which is unfortunate, And then the other thing that we're seeing is that clients are withdrawing and they're also not using the money to actually alleviate their stresses. So withdrawing from your investments at the wrong time is one of the worst things that we would advise. And then also the other thing of withdrawing at the wrong time is that, again, the portfolio doesn't get a chance to recover as it would have. So it's really unfortunate. So we say withdrawals will happen, but we encourage clients to be more controlled, to manage that in advance. So avoid withdrawing when you don't have to avoid. So manage your cash flows, have good conversations and real expectations about when you need money, how much you're going to need money, and how you should be planning for it.
I suppose one of the other things you need to do is, particularly if you're coming up for retirement, you need to know how much money you're going to have. In a moment of volatility like this, you need to look at your budget maybe a little bit more often than you would otherwise.
Absolutely, Stephen, and so much is happening. I think we have, and it's life, isn't it? Things happen 1 minute you're here and 1 minute you're there. So especially pre-retirement. So it's not at retirement, and I think that's where a lot of the problem is. It's you waiting too late to actually have financial planning. Financial planning is when you get your first job, during your career, and well ahead of your retirement. So what we're seeing is that pre-retirement, I see it with clients. We can have conversations about what are your retirement expectations. And suddenly the trends are changed so much in the sense that to retire, I'm seeing that clients in their retirement need money to also sustain not only themselves, but elder children. So because of the high unemployment figures that we have, we're finding that your retirement money you had envisaged to just support you and your spouse or just you is actually having to needs to stretch a little bit further. So it is important to have real discussions, understand what your retirement planning looks like, what needs to be happening at retirement, what are the different scenarios that could affect your retirement planning, and how much money you're going to need. So it's very robust. It's important. You need to understand the tax implications. You need to understand how much risk you can accommodate in your portfolio. Again, because failure to do that will result in you withdrawing at the wrong time, having the wrong asset classes. So it is absolutely crucial.
We're speaking to Lesego Morareng tonight on personal finance, wealth manager and director at KLU Wealth. If you've got any questions for Lesego, 011 883 0702 021 446 0567. And of course, we're talking about how you survive, how you keep calm and carry on during the time of Trump, 11 minutes to 8.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
The Money Show.
Personal finance.
Lesego Monareng is a wealth manager and director at KLU Wealth. We're talking about how you keep calm and carry on with investments and personal finance during a time of such difficulty and such volatility and uncertainty. 011-883-0702 021-446-0567. Your questions for Lesego this evening. Lesego, I do want to just spend a bit more time around the scenario planning. You know, there was this sort of golden age of retirement. People older than me maybe lived through it if they were lucky. You would stop working at 65, you'd get a nice watch, and you would have money to live on. That's not how things work anymore. You already pointed out sometimes you're looking after children into their 30s, you're looking after their children. And one of the things that you see is that education for children, private education, for example, has become more and more expensive. It knocks onto what you have for yourself.
Stephen, absolutely. So this is something that is becoming more important. And I think that's why even the younger generation can't relate to retirement, because it's nothing like what it was 20, 30 years ago. So it's definitely a personal journey, and it's something that you need to have it must relate to your circumstances. So this is something that we in our industry call scenario planning. And it speaks to that because you need to understand the risk and understand your individual risk. So understand if the markets perform like this, if I lose a certain portion, if the markets, we go through a recession for the next 3 years, what does that mean to your individual investments? So never mind what Trump is doing, never mind what does it mean to you, what does it mean to your circumstances. Again, we all have very unique, different families, we have different influences, our money does different things in every household. So it's an important time to actually understand your individual circumstances. So scenario planning is really, and it's not limited to financial planning, it's to retirement planning, it's everything, your financial plan, what is important to you. So even if retirement planning isn't a concern, your concern could be, how do I fund my children's private education? And what are the compromises, what are the give and takes that I am making in anticipation of that? So if you have young children or children that are close to planning for tertiary, what is going to happen over the next 10 years or the next few years to make sure what are you willing to give, and also you need to be happy with the outcomes, because a lot of what I see, like I said, we invest in high private education and have little to no retirement savings. And again, that is a phenomenon where when your children get to retirement, when their children graduate, there's an expectation to sort of pay me back because I don't have any retirement savings. So it's very important to have a balance, understand the risk that you are willing to take. And I said with my parents, my brother's been in the UK for 20 years. So investing in your children's education and them not living here is going to be a problem for you. How exactly? So it's important to actually plan for your own and understand risk and plan for all the different outcomes that may play. So we encourage that a lot. It's really just understanding the different scenarios, understanding your individual risk, and having a solution that speaks to that.
So often people will, and there's a sort of thing that's been part of South African culture for a long time. At some point, you go on an international holiday. You go Disney World, or you go and visit family in Nigeria, wherever you go. You want to do that kind of once, and I understand that. We all want to do that. And that's just one of the many experiences that you can spend money on. And people will say, and they'll talk about it forever, and the family holiday, and all the rest. But I don't even want to think about how much it would cost for the Ramaphosas to take all the kids and grandkids to Disney World on the trip on the way back. I don't even know if he could afford it. So what I'm talking about is you need to just think quite carefully about what matters and what doesn't. And I sound so boring when I say that.
Stephen, you're so right. And I think just coming out of COVID, there definitely is a trend to live now and to live boldly. And it's psychological, and, we all want to experience the best of what life has. But unfortunately, it is at a price. And it's a price that either you're going to pay now or you're going to pay later. So again, it comes back to understanding and drawing a balance. So we're not saying you shouldn't enjoy your life. We're saying that understand the give and takes and what risks are you actually taking in exchange for the life that you're living today. So understand what your current self is how that affects your future self. So it's a conversation we don't have often enough, because like I say, everybody's living their best lives, everybody's investing in the now, but unfortunately time goes quickly, and you don't want to be 10 years later poorer and having to rely on or having regretted the decision that you make today. So again, it's an emotional conversation, but it's an important conversation if you want peace, if you want less anxiety with money.
You need to also sort of work out what you need and work out maybe what you don't need. And it's quite difficult to have that conversation with your future self. But you also need to review relationships. You need to understand exactly what it is that you want. And a big part of that is probably having a regular conversation about money with your spouse and sometimes the other people in your family too.
Absolutely, Stephen. And money is personal. Money is you. Money is you. It reflects a lot of your own beliefs. It reflects a lot of your value systems. So again, it's something that we encourage as a family. Talk about money. Talk about the risks. Talk about what is important to the family. Do you guys prioritize education? Do you prioritize life experiences? And what is the give and take, and what are you willing to compromise? And it might be that the 1 year you sacrifice the family international holiday so that you can afford to be saving money for varsity in the next 2 to 3 years. So again, it's the conversations and the give and take and understanding the risk. I think people often it's easy to make decisions if you don't understand what the risks are. So, and it's also, it's a tough economic, it's tough economic times, and they definitely warrant us to be more careful, to make better to have better decisions and make better outcomes with our money. So I definitely encourage family planning, and even it's not just a family, it's also a family as it relates to your extended family. I see a lot of clients also, some of my clients make a lot of emotional decisions based on expectations.
Yeah.
I mean, we talk about various aspects that influence how you make money decisions. So it's important to take stock of taking care of your future self and understanding what that future self is going to require.
It's been wonderful to hear from you. Thank you very much indeed, Lesego. So much to think about. Lesego Monareng is Wealth Manager and Director at KLU Wealth.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Well, we'll be back with you tomorrow, and I don't know where we'll be at this time tomorrow. I know what we will have tried to cover. There is the budget. The Finance Minister has said that he will speak to us at 6:10 tomorrow, so we'll come out of the news bulletin and go there. There is only one possible thing that would interrupt our conversation with the Finance Minister, Enoch Godongwana. I'll leave it to you to work out what that could be, but you'll hear that live on The Money Show too. Back tomorrow, it's 8 o'clock.